Hey guys, how you doing? I'm Yongik. So today I'm going to share with you guys this video because I realized that no one has been talking about it. And I also realized that I haven't been posting much recently because I'm really busy with my personal stuff. And I'm actually trying to build a software that was going to be beneficial for all of us. Alright, so stay tuned for that. So anyway, today I'm going to share with you guys more on how to position for the trade war. Now, as we all know, the trade war has been affecting all of our stock positions. Now, if you're losing money, now don't be discouraged because same thing. If you're losing money means Warren Buffett himself is also losing money, right? No one in the market is making money unless you are shorting the market. So with that said, if you're holding long, don't be discouraged. Opportunities may come, and it really depends on how you look at it, what time frame you look at it. So anyway, without further ado, let's head on to today's video, right? So if you're I'm pretty sure most of you guys actually heard about it, but if you have not heard about it probably means you have not been investing in the stock market yet, so you should probably take action. But what happened was that on Sunday night, Donald Trump actually tweeted that China has been paying tariff to USA of 25% on $50 billion worth of high tax and all the other stuff, all the goods and all. So they're going to increase additional 25% more to $325 billion on Friday, they'll increase the tax all the way to $325 billion at Singapore time 12 p.m. this Friday if they're unable to come up with a trade deal. Now his claim was that trade talks has been going on for almost a year and nothing seems to be progressing, and that's why he's going all out to make this trade talk happen. So what happened was that overnight, I think I am blocking the video. Let me just shift myself a bit. Yep. Okay, so what happened was that overnight, the Dow Jones Index fell $461. All right, overnight, just like that. You can see this huge decline here, dropped so much. Then it started to rally back up again, but that's a different story. So it fell overnight. Then S&P 500 similarly also went all the way down, fell $49.74. And then we see the Hang Seng Index until now still falling all the way down. Alright, has not recovered since as compared to the S&P 500 and the Dow Jones Index. I'm not saying that these two indexes are better. I'm just saying that what happened was that on this date, the first day it fell down, right? The investors and all thought that it was nothing. It's just Donald Trump showing some some trade tactics and to scare China into forcing them to deal. But what happened was on Tuesday night. Let me see if I got yeah, so what happened was that on Tuesday night, I didn't really put it in, but probably it's inside, but I'm not too sure what happened. On Tuesday night, Robert Lighthizer, which is the trade talk representative for US, actually made a statement that China has been taking back, it has not been keeping up to their promise, and then they actually they sent a report back. I think I have this inside, so hold on for it. But anyway, what China did was they actually replied, said that they will still be visiting US. This is the Vice Premier Liu will still be going to Washington DC for the trade talk, but the thing is that they will be late by 3 days. So originally it's going to be like 4 or 5 days worth of trade talk, but then they're going to be late by 3 days. They'll only be arriving on Thursday, in US time Thursday. So they only have 1 day, one day to make sure that talk works out. If not, the increase in tariff will affect straight away after a day, which is Singapore time 12 p.m. Alright, so what happened was this is the trade talk. This is the statement come out by Robert Lighthizer. So he said that China on Friday night submitted a 150-page draft on trade agreement back to US. And then the document was read with reversal by China. The US claims that China has deleted commitments to change law to resolve core complaints that caused the United States to launch a full-scale trade war on China, and that's why Donald Trump tweeted that stuff. But then again, after which shortly later, Donald Trump actually tweeted 1 or 2 days later, Donald Trump actually tweeted. So by the way, it's because of this statement the market started to pull back already. So remember I said the first day the market actually rallied all the way upwards, right? The first day market really continued upwards. Second day onwards, this is the day where this statement was released. The market actually went all the way down. Okay, so after which Donald Trump actually announced that China Vice Premier is still coming to US and make a deal. Okay, he said in his tweet, make a deal, but we're not too sure how how true is that, because every single week we have seen them talk about what great progress in the trade talk and everything, and suddenly last minute they pull out this game. All right, so I'm not too sure about it. How true is this deal gonna be like for them? All right, then after which I think it was just last night. Yeah, last night, China threatens to hit back US if Trump follows through with his trade talk to escalate the trade war. So they say that they're gonna take the necessary countermeasure if the Trump administration double the rates on the existing tariff. Then right now, I feel that China's under a lot of pressure, really, because that it really reflects back on the presidency. Think about it, right? I mean, although that they are really taking advantage of US in terms of how they actually manipulate all the trade, all the difference in trade. But the thing is that if really China gives in to this whole thing, then it just shows that Chinese power is no longer is not as strong as the US power. Well, I mean, there's a lot of debates to it, but then it would just simply looks bad if China just let it go and did not retaliate on Friday if US did actually impose tariff on China. So let's take a look at the technical analysis, right? So what happened was that on this date, you can see that the stock market has rallied all the way up since the December 2018. So the market has actually rallied a lot, like around 12 to 20%. I mean, 20, maybe it's 20 to 30% around there. So it's really a lot, and it's actually about time to come back down a bit. We also notice that it actually formed a double top, not really a double top, but it actually hit a resistance line over here, and that's one of the reasons why it pulled back at this point here. Third thing we notice is that there's actually a support line here. Can you see this support line here? It closed exactly at its support line here, which actually makes sense also, because usually stock price try to find support at the levels which historically proven. So this is the level. After which, when we put in the exponential moving average, 12 days, the 50 days, and the 200 days moving average, we see that actually yes, the stock has S&P 500 has actually dropped below the 12 days moving average, so suggesting some kind of bearish movement. Then we also see that it's been supported by this 50 days exponential moving average. So technically, it's kind of safe to say that the stock is kind of stuck in the middle. It cannot go up because it has encountered a resistance. It cannot come down because it was supported by a support line there. And it's not only just one support line, it's one support line here and another support line of a 50 days exponential moving average. Now I would not know where the stock is going to go. It really depends on how the market is going to turn out. Whether are they going to have a trade talk? Are they going to have a trade deal, or are they not going to have a trade deal? If they're going to have a trade deal, the market is going to go higher. But if you're not going to have a trade deal, the market is going to go lower. But the thing is, we do not know what will happen to the market. So what a smart investor would do is they would buy the dip. Why? Because they'll buy a dip because the fundamental is there, the financial is there, and the valuation is there. But what if there's no deal? Buying a dip equals to gambling, because you're simply, let me just move myself again, you're simply betting on a deal, and there's no protection strategy. There's none at all. So what a smarter investor would do is to hold cash, because the fundamentals are there, the financials are there, the valuations are there, but then you're just uncertain whether you should enter now because of the oncoming trade talk. So let's take a look at the Hang Seng Index again. Look at this huge drop there. Now this huge drop, you can, as a retail investor, you will not be able to sell off as fast as this kind of hedge funds and financial institutions, because they have their own channels to sell their stocks. It's different from how we sell to the open market. They have their own one, so we can never beat them in terms of selling off stock if there's no trade deal. All right. Now, back when I was in the Money Mind Challenge 2017, I was actually David Kuo, the CEO of Monthly Fools, actually told me this. He said that holding cash equals to holding a stock with a PE of 100. Now this is very, very bad if you are an investor, because we all know that we want to invest in undervalued companies of PE less than 15, right? And this is PE of 100, so this is very bad. But the thing is that, Warren Buffett's rule number 1 is that you should never ever lose money, and number 2 is to never forget rule number 1. So as a retail investors, our main job is to not lose money. It's not any other thing. It's not to find undervalued stocks or whatever. It's just not to lose money at all. So what about, people ask me, what about buying cheap stocks? Hey, stocks are also cheap now. You should buy the stock now, right? I mean, Apple came back down to $200. I mean, you should buy it now. Yes, I agree with that. The valuation is attractive, but the thing is, we are still uncertain of the overall outcome of the trade talks. Now, if it's positive, then it's good for you. If it's negative, then your portfolio will just just gone. Will be just like this, and you'll be gone. All right. So people also tell me that stocks are cheap, but the thing is that when you take a look at this market data, right, you see a Dow Jones 30 basically, it's actually a PE ratio is just 18.05. PE ratio is just 18.05 versus 1 year ago of 24.29. The valuation is cheaper already. Now when we take a look at the Russell 2000, the small cap, right, the PE is half of previous year. When we look at the Nasdaq 100, the PE is slightly lower because all are tech stocks, right? And when we look at the S&P 500, the PE is also slightly lower than before. So when you tell me that stocks are cheap, you should buy now, I mean, why not buy after the outcome of the trade talk? Why you want to buy before the trade talk, since stocks are already cheaper than before? Now, end of the day, it still all comes back down to a risk to reward ratio. And I wouldn't want to influence you guys to buy before or buy after. I'm just laying out this kind of risk to reward situation to you guys, so you guys are aware of what you're getting into if you were to actually buy a stock today versus you buy a stock after they announce any possible agreement. So end of the day, if let's just say they did not agree to any, there's a no deal, right? Then stocks is going to get even cheaper, and then you'll be scratching your head because you'll be missing on an opportunity and you have no cash already to buy more stocks, right? So that's all I have for today. Hope you guys learned something, and I'll see you probably next time in the next video. Okay, bye bye.